So I'll start recording here in a minute. And again, this is very informal, just kind of hanging out with you guys. And if you would, just make sure your mics are muted. But if you have a question, you're more than welcome to jump on and ask me a question. And if you need to type, that's okay too. You could just type in main chat, and we'll go from there. So my guy who's putting the door in the office just left, so I'm letting the dogs out. They've been kind of cooped up most of the day. Come on, baby. And my neighbors don't know I'm doing this. So, anyways, anything can happen. Somebody could walk in, somebody could knock on the door. So, just know we're just hanging out and having a good time. So, I get the question a lot about the neutral strategy. Okay. And I want to go over it. And I want you to understand you can actually apply this to any of your charts. I mean, you don't have to do SPY and QQQ. You could do it on Apple. You could do it on Disney. You could put it on Amazon. It's up to you. Now, the reason why I came up with this strategy, as I was saying today, is that, a long time ago, years and years ago, when I first started, Trendy Options was the name. Um, I I was basically a beta room, and so I had a Discord room, and it was free, and we had like 1,000 people in, and there was a ton of questions, and I wasn't even sure where I was going. I wasn't sure what I was going to do, but I did know that I wanted to educate and teach people. But I also have always been, in the business of being transparent and being able to provide what I feel would be something that you could use. And I just wanted to make sure that I could create something for the trader who wasn't able to watch the screens all the time, right? Because that was like a lot of the feedback. If people leave or they feel like they're not doing well, it's because usually they say, "Hey, John, I just don't have the time," you know? And when I walk away, I feel like I can't take a trade. I just don't trust the market. That's usually like the biggest answer. People are always saying that, like, I don't trust the market. But then, on the other end, they say, well, I can't watch the screens all day. And it's like, well, what do you want to do? Do you want to trade or do you not want to trade? Right. And basically, coming up with a neutral strategy, what it allows you to do is just trust in the process. And what I would say is before we get started, once we create a neutral strategy and I show you how I use the different fib levels and supply and demand and all that good stuff, you have to ask yourself, are you willing to hold? All right, because it's completely different than the PMZ, but it's the same concept as the PMZ. You go long above it, you go short below it. And really, what it comes down to, and why I say that, is because usually we're using a lot of Fibonacci's. And what we understand about Fibonacci's, at least what I understand and what I teach, is the basics, right? So let's go ahead and just make the mid here the 50. Okay. So this is your 50%, right? And if you go back to the basics of what I teach you, I tell you that around the 50% and the, uh, let's see, do I have a gold on here? I don't think I do. Let's just do a yellow, all right? But the 50 and the 618 is for what? Right? This is the tug of war. This is where things happen with trading, where the bulls and the bears meet, and they typically play tug of war. Okay, everybody understand that? So again, 50 and 61.8% is basically like tug of war. Okay, and when you get to that point, you got to understand that it's going to be choppy in there. All right, everybody understand that. Now, then I teach, right, about the 23.6%, right? And I teach the 38.2. So let's just do, I say like a green level down here. We'll do green, okay? And then we'll do blue for 23.6. So kind of like this, right? And let's go 38.2. And down here, let's do 23.6. I think I'm getting this right. Again, impromptu stuff. So, and then up here, I want to say it's like the 76.4. I should know this. 76.4. And then we got the, oops, Then we have the 88.7, right? Now, this is important that you actually understand because when I'm teaching you what I feel each level represents, it's important that you understand that when we go into the neutral strategy. So let's talk about this really quick. The 23 and the 38.2%, we know that's either the bullish channel or it's the bearish channel, depending on the trend. Everybody gets that, right? So just so you understand, on the indicators on your banners, you have neutral, you have bullish, and you have bearish. And we were talking about those banners the other day. Basically, what those banners are doing are going back at different time frames and looking for these Fibonacci levels for you, and then it's displayed on the chart, right? So that's the secret sauce behind the banners, which really is not a secret sauce, okay? But it's the way that I teach you. So instead of me going back and trying to measure stuff, I can just quickly glance at that, okay? So that's the idea behind that. Now, up here, also, what I was taught a long time ago, and I was actually taught this, okay, I didn't develop this myself, but I was taught from a mentor back in the day that if price hangs around the 618 and breaks above it, that we have an 85% probability that we can hit the 88.7, okay? That's pretty damn cool. So again, let's go over this. Downtrend 23 and 38 is just a channel. It's either the bullish channel or the bear channel, depending on what direction we're trading. The 50% in the 618 is basically tug of war. The 76.4 is called the imposter level. I came up with this stuff, okay? The imposter level basically means that a lot of times what will happen, and I'm going to go ahead and draw on this, is that we'll break above the 618 and I say, hey guys, we got an 85% probability that we can hit the 88.7. Please understand that their timing is the variable. I don't know how long it will take to hit the 88.7. Okay, depending on what range that we actually measure, it could take 5 minutes, it could take 2 days, it could take 2 weeks. We don't know. Okay, it really just kind of depends on how much space is between each one of those levels. Okay. The imposter, what this means is that if price hits here, a lot of times because it's a Fibonacci level, it'll come right back down, but then it finds value somewhere in here and then shoots back up to the 88.7. Now, the reason why I call it an imposter level is because if you don't understand and you're not listening to me, you will get tricked. You'll think to yourself, oh, this is actually a big time for the market to turn back down to the downside, but you've already forgotten what I've taught you about the 618 and the probabilities of making it from here to here, okay? So it's an imposter level. It basically is there to prevent and block you from thinking that this probability can actually happen. The 88.7, folks, is my favorite level. It is not a Fibonacci level. It's just a measurement. That's it. Anybody have questions about these? And everybody, I would assume that all of you, and again, you know what assuming does, but I would assume that most of you know how to create this Fibonacci on your screen here. You simply were to place Fibonacci, you could go like this. And if you have the wrong numbers, you simply click on it, right click, edit properties, and then you come in here and you put the numbers. What's really neat about this is you can create whatever colors you want. And then if you want dotted lines, if you want thick lines, it's up to you. Okay. Now I've always liked the pink one as 88.7. I like the 50 as the red because it kind of tells me, hey, be careful, around these levels. Now you might be asking yourself, well, why is the Fibonacci so important? Really, guys, this is what my basis is on really creating these neutral strategies. A lot of Fibonacci is involved in these. So what I'm going to do for the next probably 50 minutes, I would say maybe 30 minutes, is show you how to do a neutral strategy. And I would like for this to be a little, participation on your part. So if you have any questions, please ask while I'm doing this, okay? Now, I'll tell you how I do this. I come in here every weekend. I turn on brainwave music. I've been listening to the same song over and over for many years. And I come in, it's not even a song, it's just like these weird noises. And I sit down, I have my cup of coffee, I relax, and it's like an art piece of work, man. It's like Picasso, right? And we come in here and this is our canvas every single day. So let's go ahead and jump into SPY. And it's kind of cool. It's almost Friday. So we can come in here and take a look at this. Let's do default. Okay, I'm going to show you how I do this. Okay, so let's go here. Let's remove drawings. Oops, clear drawing set. Okay, just like that. Now the first thing that I would typically do is I come in here and I have two. Okay, I have two that I'm looking at. So if we come over here and look at let's see, let's go across here, right there, SPY and QQQ. Let's make this one SPY, and I'm going to make this one SPY as well. Okay, just like this. And this really is a special treat for you guys because honestly, I did a video like this like 2 or 3 years ago. And a lot of times, a lot of people are like, hey, can you please teach me how to do that? And honestly, I'm like, no, I just don't have time, and I don't mean to sound rude, but I've already done a video in the past, but I think it's important that we touch up on it. And so tonight, I really hope that you take this and you apply it to some of the charts that you like to trade, okay? All right, so let's come over here and notice on here I have a weekly and then I have a daily, okay? And I'm going to make both of these default, okay? Because we're starting from scratch, all right? Let's see, John, using the fibs, is there a time to start them from the top versus the bottom? Yes, and I'm going to go over that, Mike. All right, so great question. Mike S asked me, John, using the fibs, is there a time to start from the bottom versus, using the top? So this is how we're going to do this, okay? So this is a weekly on the left-hand side, and this is a daily on the right-hand. Sorry, weekly on the left, daily on the right. All right? So just like any other time, I like to come in here and I pick a range. And I really want to go over this with you and show you exactly how I think, okay? Okay, so with the weekly, all right, you guys are going to have to get involved here. You have to assess it. Let's look at it from a trendy standpoint. Trendy edge, boom, it hit it, and guess what? It's resistance. Price is under it, it's resistance, okay? But what I'm looking for on the weekly, it's just like when I'm looking at earnings plays and stuff, I'm looking up and to the left, and I'm looking down and to the left, okay? I'm looking for supply and demand levels, okay? But I gotta pick a range, okay? I'm only doing this 1 week at a time. Nothing's ever changed. So my BMAs always go out over the weekend and they are only for 1 week of time. Okay? Everybody understand that? 1 week of time. That's it. So, would it make sense when we talk about Fibonacci's, right? I've taught about Fibonacci's before, and I have to say, if I were giving you a 1 week blueprint, okay, and to next week, would I come up here and use this pivot from 480 all the way down into this pivot? Would I do that? No, but you can. And this is the thing. This is your blueprint. You could do whatever you want with it, okay? Whatever you want with it. So I'm gonna show you. You could do this right now because what I'm doing, okay, is I am starting from up here. I am coming down here, and the reason why I do that, Mike, you asked, okay, is because we are in a down range, but we are moving up. And when I apply the methodology of Fibonacci, okay, then you'll understand why we have the 88.7 up here. See, we are moving to the upside, correct? So the 50 and the 618 are going to be that tug of war. This is where basically the line stops, okay? You see what I'm saying? So in order for me to understand the Fibonacci, We know that if we break the 618, we have an 85% probability of hitting the 88.7. So therefore, it's going to be on top of me in this scenario. Now, I think actually that this level is key to this entire BMA actually going forward. I mean, look how powerful the 50 is. And guess what, guys? It happens to be right here at the YE mid. Okay, so let's take that off. All right, and we can use the 38.2. What do we know about the 38.2? The 38.2 is the bearish channel of this move down. Okay, and sorry, my chair is super squeaky, so I can't use this one. I'm going to have to stand up. All right, so again, this is a down arrow or downtrend. We're just moving up in a down range. Therefore, the 618 is very, very important, but this is your bear channel. So these are two major levels that I think need to be on the chart. Now, do we come in here and do I say, hey, this is the neutral strategy? You see what I'm saying? If I were to do that, that would be a huge box, and you guys would never be able to trade this. Not next week anyways. Okay? Most likely you would not be able to do this. Okay? It's just too wide. I mean, imagine if I gave this to you Sunday and said, hey guys, we'll go long over 413 or we go short under 398. You would never get a trade in, is what I'm trying to say. Okay? Yeah, that's right. That's the 38 and the 50, Adam. Okay? So 398 and 413. All right? Now that's too wide. So what I'm going to do now is I'm going to come in here. I want to use these major levels because I think they're important. And when you're starting off, you could say to yourself, okay, if you're really into this, and you should be, this is 50%. Okay, and you can write this down if you want to. We're not going to. But that's the 50%. That's the 38.2%, the bearish channel. We know that already. I've been doing this a while. So I just kind of like take note in my head. Now, this is the next thing I'm going to do. I'm actually going to measure this range. Okay, so here we go. Now, I'm going to come down to this pivot low. I'm going to come up to this pivot high. Notice that I started from the bottom to the top, not from the top to the bottom. Why did I do that? Anybody know? See if you guys know. Why would I do that? Why would I start from the bottom to the top? Exactly. So we need to be thinking that this is a reversal, because when I do a neutral strategy, I want to give you an angle from going long and I'm giving you an angle from going short. As good traders, what they need to know is where to get in long and where to get in to go short, right? You want to know both sides of the trade. That actually, I heard that when I attended OTA. And again, it actually made the hair on my arm stand up because nobody said that to me ever, right? Anyone that I try to learn from, they never said that, hey, John, you need to know where to get in and you need to know where to get out. And they're like, in order for you to do that, you have to be a master of being able to short and going long. And I was like, that's kind of cool. So you're not saying all I do is just buy calls, right? Because quite frankly, when I first started trading and trading options, that's all we did was just buy calls, right? And when the market went down, we didn't really do anything, okay? So in this case, I want to look at both sides of the trade. In this event, I'm giving you the bigger picture. We found the 50 and the 38.2, but now what I'm doing is I'm also tightening up the range a little bit. So from this perspective, okay, we just fell below the extreme bullish channel, okay? So this is an important area for me. Wouldn't you say so? Now, think about this for a second, folks. If this is the 50 up here, and this is the 23.6 of the bullish move, what can you take from this? If price stays under the 23.6, what level could you expect? 38.2, right? You guys agree with Melissa? 38.2. That could be your next target. Now, when I give you this strategy, I want you to take into consideration though. If you were to go short, let's just say that this 23.6 is going to be part of the neutral strategy. If I tell you to go short at 407 and trim at 401 and it's almost 408, are you going to be able to hold for $7? Most of you? No, right? I mean, most of you are not. Okay? Just saying. Nah, man. All right. Kind of like today, guys. I mean, look at Melissa's trade, right? That was hard for her. She told you that was a very difficult trade for her, right? Wasn't easy. Some of you felt the pain about that. All right. But check this out. So, what do we have in here that we can use instead of using 401? What can we use? The edge right here. Okay. So we're going to use the edge. We're going to just come up right there. Now that's more like it. 407.97 to 404.84. Boom. I got my first level. Okay. Got my first level. Now let's use the 38.2 right here. Now let's have the 38.2 from the big range. Guess what, guys? We just came up with, okay, 3 targets to the downside. Okay. Boom. Just like that. This is a neutral strategy. And now, when I talk to you about each one of these levels, do you guys understand why I tell you when price goes down to the downside, we look for them to be support until they're not? Do you understand that? Okay. We are using levels from multiple time frames, edges. Okay. Now we got our bottom levels. So check this out over here. This is what I do. Okay. So I got a weekly and I have a daily. So now I kind of fine tune things. You know, I'm kind of big into, I'm OCD. So I need things to line up. So my lines, you know, I'll mess with those and be like, okay, that looks pretty good. This is right here around the edge. I'm going to bring this over just a little bit. And it's okay if they're, you know, off a couple pennies from where they were. I see that there's a weekly down here. So what I'll do is actually bring that up right there. Okay, in line with that. So it changes the number a little bit. And then I noticed that the 398.87, when I go left, what do we have there? What do we have there? We have an inside and up formation. Okay, inside and up formation. So what I do, okay, is I'll move this around, and that's 402. This was 398. I'm going to come right here and I'm going to go just right above that inside and up formation. So this is going to change pretty drastically. So what I'm doing is going right above there, okay? Because this is, once again, this is a demand zone, okay? And the demand zone is actually about that thick, all right? It goes all the way down to 394. But that's what I want to do, okay? This is already what I feel is a beautiful setup going into even tomorrow. I could literally do a neutral strategy every single night if I wanted to. But I found over time that it's just much easier for me to lay one out on Sunday and then we follow the rules and just kind of trade off those levels. All right. Now the next step that you could take, so we've knocked out the weekly, we've knocked out the daily to the downside, is I can now come over here and come into a 4-hour chart and just see if I'm missing anything. And what I love about this, folks, is how lines on different time frames end up synergistically coming together to other levels. Notice that this 40222 is lined up with the bottom of this pivot here. Okay. I love that. It doesn't have to be perfect each time, but I love that. It's almost like a, like a double bottom, if you will. But this is demand as well. Okay. This is demand as well. And then down here, this 400.2, you could bring it down to the bottom of this candle if you want, or right underneath this support. And for me, instead of being too early, I would prefer in this one, we're actually going to go just under here. Watch my crosshairs. because you might get confused. Basically, what I'm doing is going underneath that body right there. Okay? So we're going underneath the body. That right there is our targets. That is what I would be okay with the targets to the downside. Do you guys have any questions about the bottom targets? Yeah, Kim. I'm recording right now. Yeah. Yeah. All right. Okay. Now here's the next thing. Melissa, if you're on right now, because I don't have my other chart, what is the weekly ATR for SPY right now? Yeah. So just like earnings, folks, when I do these, then I'll come back and analyze based off of just common knowledge. And that's what we do with the ATR. The ATR is your average true range or trading range. $16. Okay. So there's a lot of volatility in the market right now. That's a lot for a week. So when I look at this and I think to the downside, current price is at 407. Okay. And I have 399 here. That's only $7. So this is a pretty tight range. But if you notice, we have an inside and up formation right here. Okay. Inside and up formation right there. So I would expect this area to hold. Okay. Just so everybody knows. So what I'll typically do, if you ever see a neutral strategy where I have more than 3 targets, it's because I went back at the end of doing this. And the reason why I do this is so that I'm not biased. I'm telling you. You can't look at that kind of information, then draw this because it'll kind of mess you up. You'll be like, well, my line's not far enough away, or the ATR is 16 and I only have 7 to the downside. And I'll get to that here in a second, okay? So I'm going to come underneath here and I'll draw another line right there and I might make it like faint, and I'll come up in here and, go here, go to more. I'll make the you guys don't need to worry about this kind of stuff, but I'll make this, you know, look like this. And then I might do something like this. And I might title it and tell you guys, hey guys, this is an inside and out formation. Okay. Um, and that's what I'll do. Okay, just like that. Right? That's what it looks like, right, folks? So now the next question is 408 by 13, 9, 10, 11, 12, 13. It's really 14, $6. Is that too wide? Now, I'll tell you that the majority of my neutral strategies are anywhere from $3 to $5 wide. Okay, sometimes they're tighter than that, but usually they're $3 to $5. Now, somebody asked today, and you might be listening, I'm not sure, but somebody asked today, hey, John, like, can we trade inside the box or do we just like not do anything in the box? All right. The reason why I say that it's neutral is because you're using Fibonacci's, and when you're stuck between two levels, they are neutral, right? Because in this case, we know if price got over the 50, we would be shooting for the 618. The probabilities are higher. We also know if we drop below the 38.2, the probabilities are higher that we test the 23.6. So you're stuck between two major levels, therefore you are neutral. Okay? Now, the advanced trader can take advantage of this and just trade. If you come up here and you hit here, this is resistance until proven otherwise. Sometimes I'm, question myself if I should make this green or if I should actually make this red. So typically this is green and then this is going to be red. And the reason why I do that is so that you guys understand that it's like calls and puts. That's why I do that. Okay. That's what's going on there. All right. It's more like, hey, call, green go long, red go short. Okay. Now, a lot of times I've questioned whether or not I should put red up here and green down here because when you push up into here, this is actually resistance until proven otherwise. And then you break back down. You see? So, yes, you can trade inside the neutral. It's just a channel if you think about it in that perspective. Another thing is, come Monday or Friday, actually, we'll have the future edges. And if you have an edge inside the neutral, you just trade off the edge. Okay, you could still trade inside the neutral zone. Okay. Yeah, so this fib, okay, was from here to here. Boom. That's your 23.6. Okay. You could actually, yep, that's okay to bring that right there. And then the initial other Fibonacci, we use the entire range from 2022 high, I believe, down into the 2022 low. And then we found the 50. Okay. So we're using two major points here, the 50 and that 23.6. Everybody understand that? And you'll be able to go back and look at it as well because it's on the recording. Okay. All right. So the next thing is, how do we get our levels to the upside? It's the same exact way. We're looking up and to the left. So one thing I do know is I have a supply zone right here. Okay. And I also have a gap fill. Okay. So I could come up here. I know that 421 is going to be a target, folks. Okay. 421 has to be a target, and we'll come about right there. 421. Okay. So that's definitely going to be a target. Do we all agree on that? Like, wouldn't you want that as a target if we break out? I think so. Okay. So we're just going to come just a little bit before the wick right there. Okay. So 420, 421. Okay. Yes, exactly, Brad. You're using Fibonacci's. Okay. Now, at the very end of this, okay, like I was showing you here on the 4 hour, what you're doing is then you go back and look at your levels and you look to see if they are lined up with inside and up formations. It's pretty cool because, really, guys, if you know how to place the fibs, you will find your demand and supply zones. That's the secret behind inside and up and inside and down. I went to a school, seriously, guys, where I spent thousands and thousands of dollars to learn something that I was able to come back and go, wait a minute, there's like a super easy way, and you guys are getting to come in here right now and listen to me and learn it just by being able to place Fibonacci's. Okay. All right. So we do this. We found this level. Okay. But what can we use to the upside? 413.93. What can be our next target, folks? This trendy edge, right? Yep. You just come up here, boom, got myself an edge. 413.93 to 416.36. Heck yeah. All right, nothing wrong with that. All right. And then up above that, 420. That's like that's almost a $4 move. Okay, in here. What I would actually do is I'm going to bring this level down and I'm going to bring it to the top of this wick. All I do, folks, is I use fibs, edges, inside and up, inside and down. And really, if you think about this, guys, it's all the same thing. And then I use structure, meaning like the body, and I use the wicks. So when I'm looking up and to the left for targets, I'm taking all these things into consideration. Notice how this one is an edge. Notice if I draw a line from this line over, I'm hitting that wick. Okay. Notice my next target is going to be the gap fill of this candle right there. Okay. So it's a little tight. I get that. Okay. But if you look at this right here, okay, this is a lot of down pressure. And when we have an inverted, I guess if you want to, inverted hammer here, okay, or doji, or what is that, like a graveyard, whatever you want to call it, the way that I look at it is there's a lot of pressure, and that's why it pushed down. So I want my level to be right under there because I understand that there's still pressure here, and people are looking at this and they'll short it, okay? And I'll show you that Convesco afterwards. All right. Boom, boom. Got that right there. All right. Now, she said 16 to the upside. We're at 7, right? And I'm wanting to get to 22, right? What's 22 minus 7? We're pretty close. We're getting there, right? So all of this kind of falls into a range. Let's just say that we are absolutely okay with this neutral strategy. You're going to learn if you do this for yourself. You're not trying to sell this to anybody. You're not trying to, it's just about you when you're sitting at home, right? So it's okay if you're wrong, is what I'm trying to say with your targets. Like if it keeps going up and you're long, who gives a shit, right? If you're on the put side and it keeps going down, you're just going to be happy. But what I want you to understand is where we get to this point right here. Now I want you to kind of dissect everything, and I want you to think this out. If price were to move down into target 3 to the downside right here, I would expect it to bounce. So when I give you guys my analysis, right, and I'm looking at this, I'll go into the broad market analysis. And the reason why I do this, I have to do it because it keeps a pulse on the market for me. It's like a journal. And although you guys appreciate it, a lot of it I do for myself because when I do it and I talk about it and I draw on here, it keeps me in the rhythm. Like I understand what's going on when everybody else is freaking out. I got to have a pulse on the market. So if the market pulls back and I did my homework and it's at 399 and everybody's losing their shit, I'm over here thinking to myself like, man, we're coming into a demand zone. Remember when I drew that inside and up on the daily? We're almost there. Okay? So a lot of this is really important for you to be able to have a pulse on the market. Okay. Notice that the clouds. Okay. Look how the clouds is pinching right down here around the inside and up formation. So I know that I have a really good target down here, guys, at 399. And I understand that inside and up is right here underneath the inside and up formation. So I love that as well. So my targets look great. I don't want to do anything to them. If you wanted to, and I wouldn't say, get in the habit of this because you could be here all night when you're trying to do this. You could break it down into smaller time frames. Okay, so here's a 2 hour, and you could be looking for other formations. But I tell you what, we have it cleared, and I feel very confident about these levels. Okay, so I would keep it right here. Now, if for some reason these are your future weekly edges right here, guys. If for some reason they stay here and they do not move, then what would I do with this red level? Anybody know? What would I do? Yep. You got to adjust it, folks, because it does not make sense. If I sent this out to you, this is now you'll understand. If I mess up, you'll be able to call me out. Because if you went short here and I got our room short under 408, there's a high probability we hit that edge, folks, and then we go straight back up. Okay. So this is what I'm always being careful of is when we have these levels here, we just have to be mindful. Does everybody understand that? We have to be mindful. Okay. Yep, I would just adjust this and come down here. Okay. All right, remember on Thinkorswim, if you move something, you can move it back by hitting Control Z. It goes right back where it was. Okay. All right, so that would be the targets to the upside and downside. Now, I see a really good question here on how would I trade this, okay, on a lower time frame. That's a great question. Okay. If you were to get into, I mean, honestly, the answer for me is the same as it's the same way that we trade everything. That's how I look at it. Okay. So the quick answer, okay, for me, like, just remember, this was developed for a swing trader. That's why I came up with this. Because I started to notice if you could just let things go and you were to take the trade based off the methodology, and you just left it alone and you came back on Friday, or when your alerts sounded off and you knew you were at a target and you jumped on your phone and you said, okay, cool, I'm trimming. If you could do that, the probability suggests, and I've been keeping this data, guys, for so long. Okay? Look at this. These are all dates in which I've kept these charts. Okay? And I've been doing this for almost 6 years. And I'm here to tell you it's a lot like the PMZ. There are more wins than there are losses. But another thing that I would tell you is that there are more people who will not ever do this because they cannot stand it. Okay, sometimes it works out immediately, or sometimes, kind of like what Melissa did yesterday, it doesn't work out immediately. Sometimes it doesn't work. A lot of times it does, but it can test your patience. Okay, just know that it is for swing traders. If you went short at the upper level this week, you're actually doing really, really well. If you went short where Melissa did, you didn't check in until the target 1 and target 2 were hit, you would be okay. Right? What date was that, by the way? Would that have been like 2? Let's just get over there really quick and take a look. What did I do? I'm trying to remember now. I think it's on this one. 2523. Is it 2523? Right? This is from today, correct? I think it is. Okay, cool. This is this week's. Okay. So let's go to two. I was like, it almost looks like the one I just did. Let's find the other one. This is the hard part. I have a hard time finding them because there's so many on here now. Okay. So if you just followed the neutral strategy this week, I just want you to close your eyes and picture this. And we could not get above here. The advanced trader could short this. Okay. If you listen to me and you're like, man, I kind of think John knows what he's talking about. He's been waiting for this stupid demand level for a week now. What if it hits? Right? What if it hits? Right? Well, I'm going to go short. Well, if you went short like Melissa yesterday right here, you were underwater for a bit. Okay? But imagine if you were away from the screens, you were taking, you're doing your job, you're out shopping, whatever it is, you're on vacation, and you took this trade and then you set alerts for T1 and T2, you would have made money. Okay? You would have made money. You can't like argue with that because honestly, if I do that and do this and you come up and look at Melissa's trade, her last, is this the one that you took yesterday, Melissa? I should have probably asked. Okay. It was 79%, folks. But this thing was down probably what, 60 or 70% this morning? I have no idea. Right? But what I'm trying to tell you guys is that the strategy doesn't say to look at the charts every day. The strategy says you go short, you place your stop, you accept your loss before you take the trade, and then you set your alerts. And if you don't have an alert that pops up on your phone, you don't do anything. So you have two different alerts that are going to go off. One, you're going to get stopped out. Number two, you hit your target. Does everybody understand that? It's just like a trade that we take during the intraday. There's only two things that can happen. You will lose money or you will hit your targets. Sometimes we hit targets, but premium killed them and you'll still lose money. That happens. But I'm telling you, if you can accept the fact that you will lose X amount of money and you're okay with that loss, you should be okay with taking a neutral strategy. But the truth of the matter is, most of you are not okay with it. You say you're okay with it, but when you put on the trade, all you want to do is win. And that's the problem. Isn't that hard to accept? Like say that out loud. Tell your spouse that, you know. Hey honey, I just put on this trade. I expect to lose $500 tonight. What? Try to get that one over. She expects it. Hiker man, that is absolutely hilarious. But isn't it, I mean, it is a swing trade, folks. Now, what if you want to trade it from a smaller time frame? What do you do? Okay. Well, I'm not going to go and look at this week's because it wouldn't be fair. So I want to do it from a perspective if I were sitting here. Okay. So this is how I would trade it. Okay. This is how I would trade it. To me, to me, the best way to do it, Bucky, is to do at the money options, man. Because what if it goes against you for a while, but then comes back? Because, let's say you go 407 puts, but it goes all the way to 410, but then it breaks down like it did today and goes all the way to 402. At least you'll be making some money. That's kind of how I like it anyways. Instead of buying 402s on the day that it breaks and then it goes all the way back up here, and then by the time it comes down here, you're barely at break even. That's just my first thought. You'd want to do at the monies. Now again, you can go through this and try it out as much as you want and kind of tailor it to your needs. If we have momentum, what I will tell you guys, if we have momentum to the upside and I say, hey guys, we just came into a monthly demand zone, then I'm expecting momentum to hit that name within the next couple days, then I think that trading out of the money here makes sense. I could be looking for 420 and I could get me a big percentage gainer. Okay. But remember, listen to me. All of this stuff does work together. Listen to my BMA. If I'm expecting chopped down and you're trying to buy $10 out of the money when it goes above there, it's probably not the right way. If I tell you, hey guys, we're coming into monthly demand, I'm super bullish. All the signs are pointing towards, hey, we got to start getting long. I think then that Bucky would be a good time to maybe, buy a little bit out of the money. Does that make sense? Yeah, or use equity, Dave. Yep. And that's a great point too, Chris. Yeah, if people want to do that for sure. Yep, yep. Selling credit. Well, if you go back, okay, you go back. And I do think that traders who come into any service, including Trendy, you should go back through the BMAs and just look at the overall success of the neutral strategy. And look, because a lot of times, guys, our targets work so well, okay, that price will push up, it'll hit one of these, it'll come back down, okay. We've had weeks, believe me, where something like this happens, okay, right there. I almost always want to say that if you want to sell credit, try to sell the outside numbers if you can. Iron Condor. I see iron condors being put on all the time without levels, just like using ATR, but I like to use levels. That's just me. All right. So smaller time frame, okay? Smaller time frame. Let's talk about this really quick. I think this is really important. How do you trade this on smaller time frame? Well, from a smaller time frame perspective, if you think about it, Most of you have the indicators, and even if you don't, you can see them on my chart, right? So how do we trade edges, right? How do we trade these levels? Most of these are in line with my trendy edges, right? And if they're not, I want you to treat the line as an edge. Does that make sense? Because if an edge is support until proven otherwise, a line is support until proven otherwise. When price comes down to this level, what do? It's the same thing that I've been teaching you guys. Now, before TTM Squeeze Pro, this is what I used to say to people. Wait for the reclaim and go long. It's literally that simple. Okay? Wait for the reclaim, go long. Now, there's a couple things that I want you to look at though. If we came over here to a 5 minute, okay? And matter of fact, let's just go to ES futures really quick. Okay. If you went long at the edge on the reclaim, notice right here, this is a great example. It's 40.88. Where would you get out? Or what should you be paying attention to? There is no difference between what you just asked me in the futures or any other chart. What would you use? I need to make sure you guys are tracking. Cloud, good job. PMZ, good job. Inside and down, good job. Arrows, good job. Everything is on your chart, folks. Everything. The trendy indicators is a one-stop shop kind of thing. What you guys need to wrap your head around is that it all synergistically works together. I go long at the edge, but I'm looking up. I'm looking up above me. Oh shit, there's a cloud. Be careful. Is the cloud too close to me? If it is, maybe it's not worth the reward. Is the cloud far away? Ooh, wow. That cloud's really far away, man. That's like 10 points away. That's 10 points for me. I got a 2 point stop. 2 point stop versus 10 point reward. I like that. $100 for $500. Let's go. Okay. Yeah, great place to trim. Okay. Notice your TTM Squeeze Pro. So the quick answer to how do you trade these levels or how to trade that on a smaller time frame, just use a bracket order, folks. You know, right? Does that make sense? It's the same thing that you would do up here. If you went short underneath the PMZ tonight, where would your target be? Right? Now check this out. This is what I'm talking about on Murphy's Law. Okay. If you tried to take the short on the break and you had your stop sitting right here at this damn level, you got stopped out. I heard somebody today say, PH, using that 10 point stop thing is really helping me. I absolutely love that because if you go back and study the PMZ trade and you're trying to put your stops right above it, and you get stopped, it could be really frustrating. But I've learned from and just watching PH over the last several months, he's doing these 10 point stops because the overall strategy is giving him enough money that he makes. He doesn't really care. He's like, yeah, 10 points is $500 a contract, right? But it's never really coming back because the strategy is so damn good. I don't actually get hit at 10 points. I actually make more money than when I get hit. That's the thing that he recognized. Okay? Yes, micros. And that's another thing. I'm kind of getting off subject, but dude, try to trade the micros. Trade zones with your micros and trade levels with the ES futures, right? Like PMZ. But zones, you can make a lot of money from zones, folks. You just got to understand that the higher the time frame the zone, the longer it takes sometimes. Kind of like Melissa's trade on Apple last week. She kept telling you guys over and over, right? People were questioning her. Hey, Melissa, are you sure Apple's okay? And what did Melissa say? I'm in Apple because of the 4 hour zone. Over and over and over. And then it popped big, right? You got to trust the zone. It just takes a little bit longer. And it's kind of hard to do with the ES contract. $50 a point, folks. So it could take a little while. Are you right now, Kim, are you in micros to the downside or upside? Okay, got it. All right. You guys understand that? All right. So again, I didn't, I really don't have to go over the neutral strategy too long. I think that it's pretty straightforward. What you have to do is you have to become the Picasso of your blueprint. You got to figure out what works for you. This is what I taught you. You can take that and apply it to you. You know, anybody in here, Mary, Adam, Dave, Melissa, all of you guys, if you're on your own and you're trading, maybe you use smaller neutral strategies and you've seen me use them during the day. Okay. Somebody asked me today, hey, John, how did you stick that Tesla trade so well? Right. And I forgot to answer. And I don't know if you're in here. Okay. And how did I get these levels? How do they work so well? Okay. Check this out, folks. The same stuff that I just taught you. Okay. I can't make this stuff up. It's exactly what I taught. This is what I said. Go long here. Look, let me just kind of zoom in so you guys can see this. Let's take this off. You're used to this, right? I'm just bragging, right? My ego's huge right now. I'm just kidding. So we went long in this box. We literally almost bottom ticked it. Okay. And price went here. That was my target. Kind of think we know what we're doing most of the time. And matter of fact, this isn't like once in a while. We don't cherry pick things. We do pretty damn good. Okay. So here we are checking this out. How do you do a neutral strategy from this? Anybody want to know? Anybody want to see it? All right. So this is our strategy every single morning. You want to trade something tomorrow morning, there's a couple things you got to take into consideration. Okay. Let's look at the overall trend. This trend was really strong this morning, right? It's been strong. You guys know that. And this is what I looked at this morning. I noticed that we came into the cloud already, and I noticed that we were going inside and up. Okay. But I also, just for these sakes, I want to find out how did I get that good target up there at 213.86? I can't even remember. I'm not going to try to figure it out now. But anyways, if we want a neutral strategy, let's take it from here. One must understand how to identify, okay? And let me come over here and go to, we're going to create a create drawing set and example. Wait, let's just call it neutral. All right. So I want you to understand trend. Trendy does it a little bit different, okay? Most of the time. Look at this beautiful trend, okay? Now, when I come in here for the daily, I'm looking at things like this. This went up, this went down, this went sideways, this went up, this went sideways, this went up, this went sideways, this went up, that went sideways, this went down. This went up, this went sideways, this went up, this went sideways. Now this went up, okay? You need to be able to spot that. I know that it seems really trivial, it seems easy, but you'll be surprised how many people don't catch that. I don't like sideways trend. So when I come in here to draw my Fibonacci's, I exclude, for the daily, I'm excluding this. I don't care about this. Does everybody understand that? For this particular setup, if I were going into tomorrow, this is how I do this. Okay? Yeah, we chat there, Decona. I've been asked that before, so we chat there. Sorry. I know there's another place to chat, but it's like too much for me to look at. That's funny. All right. So I exclude that. So let's do this. Boom, 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 like that. Okay. Everything I just taught you, but we're using a smaller time frame. You guys tell me. And it's funny, maybe some of you guys will have different answers. Where do you want to put the top line? Let's see how much. I'm going to let a couple people answer, and please do not copy everybody. Where do you want to put the top line? I need a Fibonacci level, not the price level. All right. So, just so that everybody understands, nobody can be wrong. Okay? Nobody can be wrong, but I'm going to tell you what I would do. Okay? And it doesn't matter. Believe me, it really doesn't matter. For me personally, because this is an inside and down, okay? Right here, this is a supply zone. So if I were to tell you to go long at the, if I, let's say if we use the 38.2 as the neutral, okay? And let's say we use the 618 as the bottom, okay? I won't ask you where you're going to place the bottom, but I'm going to place the bottom at the 618. Why? Can anybody tell me? Why would I want to place the 618 as the bottom? Yeah. So a lot of good reasons, right? There's actually several. And Dex, I like what you wrote in there. Okay. So and the edge. I mean, there's so many confluent reasons, but the main reason for me is because I need to be thinking if it continues down. If it continues down, I have an 85% probability it'll hit the 196. Okay? Does that make sense? So remember, this is a neutral strategy. I want to know where to get short. And this is the higher probability. Okay? Is that I see levels here. We don't have to get there, but we're going to identify this one, and that happens to be a trendy edge. And then we're going to identify this one. Okay? For me, I would use the 618. To the upside, the 23.6 or 38.2 is fine. But what I need you to understand is if you went long above the 38.2, there is a good possibility you run into resistance at the inside and down. Does that make sense, guys? So your reward here is 206 to 208. If you're okay with a $2 reward, and believe me, there's nothing wrong with it, especially on a Friday, by the way, okay, with zero DTE, right? If we took that and it ran to 210, you'd be super happy. But what I'm trying to make you understand is that you have to understand where the risk to reward is better for you. Now, what's interesting about the neutral strategy also is the 618 is support. So, if this, then that. If price comes down into this edge and into the 618 and it breaks down just like this, but it starts to hold, guess what can happen? We can get what happened to you guys on that SPY trade. It can bounce really hard, but there's a high probability that it cannot get over the 23.6 and that it will come back down and do this because there is supply being built. This is why I bought the butterfly this morning. Holy crap, I didn't realize they were down $3. Are we in the money now? Oh, we are. Holy smokes. Interesting. All right. So in the money on these because the idea is that we went inside and down. Everybody understand that? So it's okay. Nobody was wrong. 23 or 38%. Okay. It's just that it's up to you. If you went long above 208, I need you to understand if you went, even though this is the bullish channel, Melissa, and anybody that said 23.6, I need you to understand that you're going long into this supply zone. Does everybody understand that? It doesn't mean it's not going to work, but I need you to understand the better probability is to actually wait and either try on a reclaim of the 618 or down here at the 88.7. If this, then that. If price gets above 206, we'll go long. If price gets down to the 88.7, we'll go long. You can also do it right here at the 76.4, folks. Okay? Those are all the levels we can use. All right. So these are the ones I would use. It's a $5 range. It's pretty wide, but it's all good. Now, the trade from today, let's kind of take this a little bit further. The trade from today was just based on using fibs and looking at this inside and up that was happening. Okay. And then I gave you that target. All right. So this is not the kind of trade that I typically want to tell you to buy the dip on. Okay. Not until it gets further down here. Look at the support by the edge, by the way. All right. Pretty cool. All right. So before I go on and show you a couple more examples of things, do you guys have any questions about the neutral strategy? What I tell you is when you're finished, go back and look and make sure your levels on different time frames are lined up with the particulars, the inside and up and so forth. Okay. All right. So moving on. So this is kind of off the cuff. Again, since we're sitting here talking about edges and stuff. Okay. Edges. They are a playing field of supply and demand. That's it. Okay. That's it. But they are a little bit more robust than just a line. And I always tell people that if you come over here into the actual code itself and you look at the trendy edges, yeah, sure, it's just a line, right? But remember, if we open them up and we take a look at them, then you would be able to see that there's actually a lot more to the indicator itself. Okay. So we have arrows, we have show only last period, we have the breakout arrows, we have shorting arrows, and we have alerts. And a lot of people don't realize that we have alerts down here because the code is actually looking for bullish formations that happen around the edges. Okay, and it looks for bearish formations. Okay, so you got alert 1, alert 2, alert 3, and alert 4. You can turn these off or you can turn them on and they'll show up in your alert section. Okay, so up to you if you want these on or not. You can say if you want it to chime, ding, ring, whatever the hell you want it to do. But they are a lot more robust than people think. I can change them to all sorts of different aggregates if you want to trade off of a 3-day edge, if you want to trade off a 1 hour edge. And the cool thing is you can come in here and you can make these your targets. So for my scalpers who love to scalp, you can actually come in here and all you do is you take this indicator and you move it over several times and you'll have one that says 30 minutes. You have another one that says 2 minutes and you have another one that says 30 minutes. And what happens is on the white screen here, right? You'll have a chart and for my scalpers, this is your chart. You'll have all these beautiful lines, okay? You'll have the PMZ on a 5 minute, but you might have like a 5 minute edge. You might have a 30-minute edge. You might have a 1 hour edge. And all of these can be your major pivots, right? So these are targets that you can create for your 5 minute chart. Does that make sense? So just know for you guys that have these indicators, you can apply them several times and change the aggregate to a different time frame, and these are going to give you some really cool targets. So you know how we talk about quant pivots and stuff like that? You can create your own quant pivots just by using the trendy edges on multiple time frames. Do you guys have questions about that? So just something to think about. Okay. And let's come over here. And I think it was, yeah, it might be on this one. So if I put this on a 5 minute chart and I go to ES, there you go. These are 30-minute targets. This was the edge. So this is a 30-minute target. Okay. And I can change these up if I want to. These are 30-minute targets. Okay. 30-minute targets. I haven't studied the quants enough. I had the quant pivots for sale in this room. So if none of you have them, PH uses them. Okay, and he loves them. Matter of fact, I was trying to sell him the edges when he first got here. And he's like, "Oh man, but man, the way you taught me the methodology, I can apply it to any level on my chart," which he has a very good point. Okay. It's really just listening to me, coaching you, making you understand how to trade a level that can really help you. Okay. So the quant pivots, I don't have enough background to understand enough about them. And I've been using my edges forever, so I just prefer my edges. But the quant pivots can give you more targets on a chart. Let's see if I were to come up here and do something like this. Now I can't remember what the heck it's under. There they are. Yeah, and then if I change this, I want to put it on a 4 hour is what I want to put it on. 4 hours. There we go. And let's see. Show next. No. 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 And I think they're supposed to pop up, aren't they? Did I do something wrong? Anybody tell me? Did I do something wrong? Maybe they're not on here. Oh, they're there. Oh, there they are, right there. So, I mean, look at them and look at my edges, right? I mean, they don't always marry up, but, we have one here and there's a quant pivot there. Um, there's one of my edges there and there's a quant pivot there. So I really like that. They're very close to each other. But man, I mean, for me, if you look at the edges, they just have been working for so long. I just trust them. So. And I had the quant pivots on for a couple weeks, and for me, I just I think they work great, but at the same time, I just also know that the edges work great. So yeah, gotcha. All right, so the neutral strategy, pretty straightforward, folks. If you don't have any questions, that's really all I wanted to share with you tonight, and just understand that we could do these all the time. I often joke, but I wish we should have like a cocktail hour, happy hour where we just kind of sit down like this and talk about strategy, and things like that. I think it's great to be reminded kind of what we're doing here. So yeah, no problem, no problem. Yeah, Dave, that's right. Hey guys, the poll is going well. So I would love to have some sort of like trendy get together one day, um, and hang out with some of you guys if you're ever in the area. So that'd be neat. Real quick, I don't want to get you guys not thinking the short side, but you're talking about your short. Just remember really quick before we jump off of here what I've been waiting for this entire time, right? So I've been waiting for this zone down here. You guys have heard me say this over and over and over, and I'll say it again. Typically, when my level's not touched, I have like a little yellow flag in the back of my head because usually my levels are touched. All right, it's rare that this happens, but when it does, it can bounce pretty hard. But I would expect price to come in here just to satisfy my need. But just be careful, okay? Because we did come close to it. I think a 10-point stop on micros is great for a learning. So please keep learning. But I do like the divergence. So if we do not take out the low tonight, there could be a possibility that we get some volatility tomorrow and then back down to the downside. Okay. For the upside, we have created what I want you to pay attention to tonight. If some of you guys are not going to bed, we have an inside and down formation here on the 4 hour. If for some reason one of these candles goes inside, I do think we create it inside and up, and then we're going to have a playing field on the 4 hour, folks. So if this goes up and inside and then we go inside and up, we're going to create a zone here, and this will be the playing field. Okay, everybody understand that? It's been very volatile. We're not getting a lot of ranges, or sorry, we're not getting a lot of follow through for the last couple weeks. So just stay the course. Don't get washed out. Don't get frustrated. Just be careful. Please, please take the time to watch my BMA, folks. Listen to it. If you have questions, ask me. Know what the charts look like in the futures because really, like I tell Simpler all the time, the ES is what guides my portfolio. So if I'm expecting it to be choppy to down, I'm being super careful over here when I'm trading. I'm typically trading smaller. And then once we get into trend and I see that we're in demand, I'll start going heavier. I'll start having more fun, but I'm pretty boring when it's like this. So again, just being really patient. All right. So please stay patient so that you guys can be here another day, and we'll see you soon. We'll see you in the morning. Yeah, yeah, yeah. The TV. Yep. So you guys don't have to stick around if you don't want to, but Adam, really quick, you still there? Cool. Let's see here. And let me call my wife really quick. She keeps calling me. I want to make sure she's okay. She's gonna yell at me right when she gets on the phone. Just kidding. And I'm gonna pull up TV. No, no problem. Hey, baby. I am on the mic. I'm live, so don't yell at me, okay? No, yeah, so I just want to make sure you're okay. Okay, cool. I am at home. I'm on the mic. I'm doing a like a little impromptu sort of webinar thing. I did. Yeah, I'll follow up with you when you get here. But did you want to drop by Kava? Don't worry, guys. I haven't left you. Love you too, baby. Bye. All right. Sorry about that, guys. So let's go ahead and let's come over here. Um, yeah, let's pull this thing back over here. All right. So this is actually, just so you know, Adam, I think it's in my other video, man, under education. But I give you tips and tricks on how to use TV and how to do some of this, okay? So I would definitely watch that video. It's very formal, informal, but it's you'll like it. Let's see. If you come over here You see all this stuff on the left-hand side? Like, are you a TV? Have you been using TradingView for a long time or no? Are you kind of new at it? Oh, 4 months. Okay. So you know if you come over here, you put a star by all the stuff that you like. Did you know that? You put a star and it creates this thing right here. Okay, cool. So for me, um, um, I created what's called a target, right? So each one of these, do you know how to create templates with these? So like for example, when I put a box on here, I can right click on it and then I go to settings and I've created all these templates. I could do inside and up and it turns green. It says IAU. Okay, so you know how to do all that stuff. The only thing that I know, as far as like a target, the only thing I know how to do is I created a template that says target and then the numbers right here to the right hand side. That's the only thing I know how to do. So, as far as like TOS, I don't think it does the same thing. So if I come to settings, I don't think that coordinates, template, visibility, ranges. Yeah, I don't know if you can do it the same way, man. Yeah, TOS does not save templates. How to add the target line? Yeah, so on here, it's this one, the horizontal ray. Yeah, yeah, y- yeah. So I just click here. So another thing, if you didn't know this trick, you click on it, hit Control, and then drag it, and you can just make a thousand of them. Yeah. Yeah, yeah. You click down, hit Control, then drag, and you can make a bunch of them. That actually saves me a ton of time. I would definitely create templates on inside and up and inside and down or supply and demand, however you want to say it. This I love about TV. You can keep all this. I've kind of went to the wayside, guys, of my signals, but I can create a ton of signals to be fired off into the room based on the methodology. I could do it on 4 hours, a daily, a weekly. It's kind of cool. It's a code that we have written, and you guys can see those coming in with like ES futures and stuff like that, and SPX. But you could do that on any chart if you guys ever ask me and you want to know. But a lot of people would just give up because there's so many signals. They're like, oh, I'm not paying attention. But I tell you what, a lot of those signals are really, really good. Um, and so just pay attention to them. And basically what they're doing is they're letting you know when these arrows are popping up on whatever time frame that I use. And as I've told you, if you are a TV user, I am huge into the 3 minute uh, um, signals. Okay. So if you want to trade SPX, and I do a lot more SPX trading in Ashley's account. And honestly, folks, these arrows are money. I mean, look at them. Coupled with the PMZ and stuff like that, you go short, you put your stop above the arrow, and that basically this is kind of what we programmed on that signal. So when it goes off, what it's doing is it's telling you to short. Okay. And the reason why I say under the cloud or over the cloud is because I want you to know, like, if you're over the cloud and it's telling you to short, I have to double check the chart. But if it's under the cloud and you get a signal, the idea is to go short and your stop. I automated it to where it falls within a certain percentage of the arrow because what we found is if you go back and you place a stop right above the arrow, it works a lot. For a short, it works a lot, right? And you could just keep going back. And then, far as a trade to the upside, and you can see how much it works here. For the upside, it's the same thing. You would just place a stop underneath the arrow, and if you're okay with the risk, where price stops, if you're okay with the stop, you take the trade to the upside. But notice this would be a green arrow going into a cloud. That wouldn't be my type of setup. Only way I would take a SPX underneath the cloud is if we're in a demand zone. So we would have to be down here at 4060. Okay. Anyways, I just want to show you guys that. Don't forget about the SPX signals. They really are like they work very, very well. I like to trade SPX, but I like to trade it out of the money, typically like a very low delta. And I just kind of go with the PMZ or I trade at the edges and with the trend. So I've had a lot of good trades with that. So let's see. The huge daily bearish engulfing candle on SPY today doesn't that scream lower into the 400 into the bottom of the daily cloud? Let me take a look real quick. And let's see. You said daily. Yeah. So what I see there is an inside and down formation. So we created supply on the SPY. So I would come up here just like this, and let's do settings, and let's say supply. The only thing about this is that this candle right here, Chris, hasn't moved enough down to really call it a supply zone yet. It is a good anticipation of a supply zone. So I would go short off of this, of course, after it breaks down below this level, you should be short, okay, from an inside and down perspective. Now you want to be looking down and to the left. And so for me, we have an edge here we have an edge here, and it is right in line with this demand zone here. Okay. Now this demand zone, really quickly, let's see, what is all this? Oh, I probably got this on the quarterly. I'm messing up my chart here, but if we go into inside and up on the daily, I would have to say, see this zone right here? That is at 400.29. This zone has been tested. So a lot of new supply and demand traders miss stuff like this. Price left here, and look, it came right back to that zone. That zone is right here, and it came back right here. And we are making higher lows from that zone. So the only thing that I can tell you is that for me, this right here is your demand, okay? And that is your supply. And it's honestly, both sides are very weak, if you will. All it's doing is setting up, once again, some range that could look like this, man. That's just my opinion for right now. Very boring. Now, let's go to actually, since we're in here and looking at this, let's go to my bigger picture that I send out every week, and that is this chart right here. And let's not forget this. This is the part where I really want you guys to focus on what I'm teaching, right? If you go back and you look at the broad market, I've written down what to expect. This is the bigger picture. This is, if you will, a neutral strategy by using the bullish channel. Okay. Back in the bullish channel from 2020 rally, folks, this is bullish, super bullish. So while you're looking at it to move back to 400, which it definitely can, my bigger picture though is 390, super bullish between 23.6, 424. We're holding the quarterly cloud, but we should maybe digest down to, possibly, man. That's the thing is I don't like to throw a lot of like, oh man, it's engulfing candles, so it's got to go to 400. Doesn't have to do anything, right? But if we approach the market with a if this, then that scenario, I just find it a lot easier because if your thesis gets beat up and we gap up 30 points tonight, and then we have some kind of econ data in the morning and we're right back up here, at the highs of the week, and all of a sudden that thesis goes out the window and you have a hard time getting back in the groove of the market. So just do me a favor, and I say this to everybody, just try to approach the market from a week to week basis, a day to day basis, because trying to figure out what things are doing a month from now or 2 weeks from now, most of you guys, and again, I'm not trying to offend anybody, you talk a big game, but most of you can't hold more than a couple days, and that includes me. I mean, you got to come up to the reality that, eh, you know, do I really care what the market wants to do a month from now? Not really. I just want to make some money. That's just me, man. I've learned the hard way. Yeah. And Melissa talked about it the other night when we had our webinar. She really, and I keep wanting to repeat this because it really meant a lot, I think. She said when she first started Trendy that she kept watching videos. And those videos were basically around people's opinions on where they thought the market was going, but it wasn't really like trendy in the sense that it gave you a what if this, then that scenario. Do you know what I'm saying? Like, just think about that. There's a lot of noise out there, right? So if you keep like attaching yourself to a narrative that you believe in, it just it as a day trader, that's what most of you are. It just doesn't make sense because like I look at each one of these candles, folks, and I think about all the poor souls that are having a really hard time, you know? Look at this. A huge gap up, folks. Huge gap up into the trendy edge and didn't get over the PMZ. And if you didn't have those levels, you're trying to buy at the top because you think that the market's going to continue up. Look over here. Okay. Once again, we hit an edge. I told you this would be resistance. This edge, that's resistance. I told you we'd come down into demand. We missed it by like a point, right? This is what's actually happening, and we can the only time that you're going to catch me off guard, guys, like, and it's happened before and it's okay, is when the market has a catalyst overnight and it just happens out of nowhere. Now, most of the time, I would say at least 80% of the time it's happening at a supply zone. So we're already prepared, okay? We're already prepared. But timing is the variable. It's kind of like the last couple days. Like I'm looking for the demand zone, but they took almost the entire week to bring us into the demand zone. So it's kind of like my hedge, right? I bought a hedge at the beginning of the year and it's down 60% and it's just absolutely been crushed. Timing is the variable. So the idea of something that has to happen can happen, but unfortunately, time can absolutely crush you. So you have to approach it if you're going to buy based off a narrative or a thesis or an idea that lasts over several weeks, then just be prepared to be wrong, you know, because the market has a way of bouncing around and dipping and, you know, just doing its thing enough to kind of burn you out, you know. So I just found that trading with comfortable size is the way for me in a week to week basis. Now I say week to week, but I do the yearly projections. I do quarterly candles. I use yearly candles so that for you folks that like the bigger picture, we can talk about that. So if you go into the yearly, okay, and you look, what do you see? Right? This is, and I don't know if T Camp's on here, but this is the Glizzy. And we talked about it, Ninja from a long time ago. Him and I used to talk, here and there, and he named this, and I thought it was funny. I really think that this is the hot dog, baby. You know, and this I really encourage you guys to go back and look at this formation. All right, it's not very common, but what I have noticed is that it tends to create the bun on the other side, and you got yourself a nice little hot dog right here. That's the mustard. A little bit of ketchup on that. Who likes hot dogs? No, that's an annual, dude. That's a 12-month, baby. That is a 1 year candle. Yeah. This is what I brought up at the beginning of the year. So it's like you might know more ins and outs about the glizzy, but hey man, I think from my studies that I've seen is that the other bun kind of happens. Now, this is out of whack if we break below that support line. Okay. So the inside and down only really begins if this happens if we break down below here. Everybody understand that? Then we open up that can of worms. Okay. So, Chris, if you're still on here, Chris C, if you're still on here, dude, that's where I think, and sure, you could be early to the party and it can happen. But for me, the bigger picture is if we go below that candle, then I think we can get a real sell off. But until then, these are just digestion areas, in my opinion. Okay. So, and I understand, like, we could short from here at 407 all the way to 381, but that's what my hedge is for, man. You see what I'm saying? Like, so for me, as long as we can stay in the bull channel, I'm buying dips. And if we break below support, then I'll add into that hedge and then we'll make a bunch of money. So I spent 2021, I spent some time listening to some folks it kind of, it was a mistake for me because I attached myself to a thesis that somebody else was sharing, and quite frankly, I never got big enough during 2021 because I was always scared that the market was going to come down, you know, and it just was very, very difficult. So I just be careful of what you're listening to and what you're reading. I understand that it's attractive, you know, it really is. Like if people said, "Hey, if you want to make millions of dollars in the market, all you have to do is tune out the noise and just trade levels." A lot of people don't find excitement in that, you know? If it's sexy, it sells. If I make this sound super complicated, it sells. If I make it sound super complicated, it does pull out a bunch of interest and people get more interested. But if I make it simple, which I really do feel like I make the mechanical idea this simple, it's not as attractive. I mean, I remember I had a friend of mine who uses Fibonacci's. Jesus, you could get so confused watching him. I mean, there's like Fibonacci's everywhere, and it intrigued me from a perspective of, oh my God, there's so much going on here. Like, please tell me more. But then I realized it's just a bunch of noise, man. It's like, holy smokes, you know? And that's what's important. And by the way, just so that I'm very clear, my PO has been super flat this week, just so everybody knows that. Super flat. So, I'm okay with that. In this market, I'm like, oh, the market sideways, it's all good. But anyways, it is 7:39. Love you guys. I appreciate you coming out and listening. I'm going to take off and just hang out, and we'll see you guys in the morning. Hopefully, Melissa, no pressure. Let's get one of those 500% gainers tomorrow. I'm going all in. She's back. I could feel it. She's just waiting. Yep. Yeah. You guys have a great evening too. Have a good one.